Hello folks and welcome to my channel. Please subscribe for more info on buying or selling a home, virtual home walkthroughs, info on different systems in your home purchase, and even some recipes for your new kitchen. I am Margarett, your go-to Space Coast Realtor, and I would love to guide you through the process and be your go-to realtor to find your dream home. All right, buckle up, future homeowner. Below is a deep 2025 ready dive into what you actually need to get a home loan, how credit matters for each major loan type, what to expect for down payments, PMI, mortgage insurance, interest differences, and what to do if you have little or no credit. I'll keep it practical, punchy, and useful for buyers on the Space Coast and beyond. Quick overview: what you must do to get a home loan in 2025. Get and review your credit reports from the 3 bureaus and fix errors. Lenders will look at your credit scores and history. Gather documentation 2+ years. W-2s or tax returns if self-employed. Pay stubs 30 days. Bank statements 2 to 33 months. ID, Social Security, and rental history or explanation letters for gaps. Lenders will ask for assets, employment history, and debts. Know your debt-to-income (DTI) ratio. Most lenders like total DTI under 43%, some flexibility up to high 40s with compensating factors. Get pre-qualified, pre-approved. Lenders run credit and will give a pre-approval letter stating how much you can borrow. Rate shop within a short window to avoid extra credit score hits. Choose the loan type that fits your situation. Conventional, FHA, VA, USDA, Jumbo. Each has different credit, down payment, insuring rules. Details below. The main loan types, what they are, and who they're best for. Conventional, conforming loans. Typical buyer, available through any lender. Follow Fannie Mae, Osh, Freddie Mac guidelines. Minimums, typical rules in 2025. Usually 620 qualifico minimum. Down payment as low as 3% for some programs, but 5 to 20% common. And PMI required if down payment, 20%. Rates depend on score, down payment, LTV, and loan term. FHA, Federal Housing Administration, government insured. Great if credit is lower or you need a small down payment. 580 plus FICO, 3.5% down, 500, 579, 10% down. FHA requires mortgage insurance premium, upfront plus annual, which can make monthly payments higher than an identical conventional loan. But the lower credit side down options are powerful for many buyers. FHA may require more property standards and occupancy rules. VA, Veterans Affairs loans, for eligible veterans, active duty, reservists, and certain surviving spouses. No required minimum VA score, but most lenders do set their own floor, commonly a 620. Huge perks, often no down payment, no PMI, and competitive rates. But you'll typically pay a one-time VA funding fee, can be financed. Lender overlays vary, so shop lenders. USDA Rural Development Loans, for qualifying rural eligible areas and incomes. Guaranteed USDA loans typically expect 620 plus from lenders. USDA itself has credit review rules and may allow manual review, offer no down payment in many cases, and are for borrowers meeting income and property location tests. Other options exist, e.g. portfolio loans, specialty state bond programs, and non-QM products, but the 4 above cover most buyers. Credit requirements, by loan type, the meet. Note, minimum often means you may qualify but with higher rates and stricter compensating factors. Lenders also set overlays above agency minimums. Conventional, conforming, 620 minimum typical, higher scores, 740 and plus, get the best pricing. Lower scores mean higher rates and may require larger down payment or reserves. FHA, 580 to get the 3.5% down advantage. 500 to 579 will generally require 10% down. Below 500 is usually not eligible. FHA also allows manual underwriting in certain cases if automated underwriting fails. VA, No mandated minimum, but many lenders want $620. Stronger profiles get better rates. Lender standards vary widely. USDA. No single USDA minimum across the board. USDA direct loans have different rules. USDA guaranteed loans often see lenders asking for $620. USDA requires a full credit review when scores are 640 or there are 1-0 scores. How credit score affects your interest rate and therefore monthly payment. Lenders break credit into pricing tiers. Even a 20 to 30 point improvement can move you to a better tier and shave basis points off your rate. Over the life of a mortgage, that can be thousands of dollars. Tools like MyFICO and published lender pricing show these tiered differences. Example, illustrative, not a quote. For a $300K loan, a 0.25% lower rate could cut your interest paid over 30 years by several thousand and reduce monthly payment by dozens to a few $100s depending on rate. Use personalized rate quotes to see exact dollar impact. Rates also change with market conditions. How much do credit checks and actions affect your score? Hard inquiries, when lenders pull your credit for a mortgage, generally knock your score by fewer than 5 points for most people, and the effect is temporary. Rate shopping for a mortgage is smart. FICO treats multiple mortgage inquiries within a 145-day window as one, so shop lenders within that window. Soft checks, your own checks, or some initial pre-qual pulls do not affect your score. PMI versus FHA mortgage insurance versus VA funding. Fee, conventional PMI, private mortgage insurance. If down 20%, expect PMI. You can request cancellation at 80% LTV, and it's automatically terminated at 78% LTV under federal law, Homeowners Protection Act. PMI cost depends heavily on credit score and down payment percent. FHA mortgage insurance, MIP. FHA requires an upfront mortgage insurance premium, UFMIP, often financed into the loan, whole 1.75% historically, plus annual MIP. For many FHA loans, the annual MIP may remain on the loan for many years, or life of loan under older rules, depending on down payment size. That can mean longer-term insurance costs versus conventional PMI. VA funding fee. VA loans don't have PMI, but have a one-time funding fee. Percentage varies by down payment and service history, which can be financed into the loan. It's generally less expensive than ongoing PMI for many borrowers. Interest rate differences across loan types, general patterns. VA and USDA frequently offer the most competitive rates for eligible buyers because of government backing and risk mitigation for lenders. FHA rates are competitive, but MIPI can raise monthly cost. Conventional rates are competitive for strong credit profiles and can beat FHA if you have good credit and put down 5 to 20% and avoid long-term mortgage insurance. Important: exact interest rates change daily, depend on market yields and lender pricing, and differ by credit score, down payment, loan term, and points. Always get live quotes from several lenders to compare APRs. If you have no credit, never had a payment, credit card, or loan, your options. You are not doomed. Lenders will want to see the payment history, whether from trade credit or alternatives. Non-traditional alternative credit. Landlords can document on-time rent, utilities, cell phone, insurance, or other recurring payments to build a rental alternative credit history. Agencies, lenders like FHA and USDA have formal ways to accept this when a credit file is thin. FHA manual underwriting and USDA full credit review processes exist for these cases. Manual underwriting. If automated systems don't approve you because of 0 scores, a manual underwriter can evaluate rent, savings, job stability, and other compensating factors. FHA supports manual underwriting in certain scenarios. Co-signer or non-occupant co-borrower can help qualify but has long-term responsibilities, and some lenders disallow co-signers for certain loan types. Weigh carefully. Build credit quickly, recommended if you can wait. Add a secured card. be an authorized user, or ask rent reporting services to report payments. Aim for on-time payments and low balances. Even a few months of clean history can help. Use credit-building products designed for home buyers. Which loan will give you the best monthly payments, and what are the drawbacks? Best payments if you qualify. VA or USDA, no down payment, often produce the lowest monthly out-of-pocket and competitive rates. But VA is only for eligible veterans/service members, and USD requires property in eligible rural areas and income limits. If you have lower credit or tiny down payment, FHA makes homeownership feasible, 3.5% down at 580 plus, but MIP may make monthly costs higher over time. If you have strong credit and 10 to 20% down, conventional is often best long-term because you can avoid long-term mortgage insurance, get better rates, and cancel PMI earlier. Drawbacks summary. VA, funding fee, eligibility limits, lender overlays. FHA, longer-lasting mortgage insurance, property condition rules, sometimes more seller pushback. USDA, location and income eligibility, processing can be slower. Conventional, higher credit score needed for best pricing, may require larger down payment to avoid PMI. Practical checklist. What you need to do now to be mortgage ready, 2025. Pull your credit reports, annual credit report or MyFICO, and fix errors. Small points matter. Save for down payment plus 2-3 months of reserves if possible. Reduce revolving balances, lowers DTI, and improves score. Gather income docs, 2 years, OU2s, recent pay stubs, bank statements, if self-employed, 2 years tax returns. If you have no credit, document rent, utilities, and talk to lenders about manual underwriting, alternative credit. FHA and USDA have processes for this. Shop at least 3 lenders for rates and ask for loan estimates. Compare APR, fees, mortgage insurance. Consider whether a 30-year fixed, 15-year fixed, or adjustable rate, ARM, fits your plan. Shorter terms equals lower rates but higher monthly payments. FA quick answers. Can I use a co-borrower to qualify? A. Often yes, but rules vary by loan type, and many lenders limit or restrict non-occupant co-borrowers. Discuss with your loan officer. Q. Will a single late payment ruin my chances? A. Serious delinquencies within recent 12-24 months matter more. Lenders look at 2+ years of steady payments and compensating factors. Q. Do interest rates depend only on credit score? A. No. Market rates, loan term, down payment, LTV, loan amount, debt to income, property type, and lender fees all affect your offered rate. Please subscribe to my channel for more info on buying or selling a home, virtual home walkthroughs, info on different systems in your home purchase, and even some recipes for your new kitchen. Signing off here on the Space Coast, and do not forget to subscribe. Call, text 321-480-7662. Website https Margarett sells dream homes. Come YouTube walkthroughs https www.youtube.com dream home Space Coast Florida. I am Margarett, your go-to Space Coast Realtor, and I would love to guide you through the process and be your go-to realtor to find your dream home.